folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we'd come to you today with a brief market update, kind of let you know what's going on out there. S&P 500 right at about 68.15. We're opening up kind of flat here today after a very strong beginning to the month. So the S&P 500 is essentially flat for the year at this point. Down about 2.3% off the peak, which we recorded back in about February. But then we're actually up about 7.5% during the month of April. And a large part of that came from last week when we were up about 3.6, 3.7%, which is one of the best weeks we've had in a very, very long time. All of which driven by, potential resolution or an emerging resolution to the crisis in the Middle East, which we will talk about in a minute or two. I do just want to mention that this also is the start of first quarter earnings season. We have all the big banks reporting this week. And so investors' eyes will be focused on what those banks are saying about consumer spending and potentially how the conflict has impacted consumer confidence and what they are seeing in their own spending data. So all eyes will be kind of locked on that. Negotiations starting over the weekend and ending over the weekend, failing to reach resolution. That's not really all that surprising to anybody who, would really spend a lot of time thinking about how negotiations like this would play out. It's very clear, given the demands on both sides, that if a peace deal is going to be reached, one or the other is going to have to give up on some things that they want, such as control of the strait, such as Iran's nuclear program, etc. There's just no way for the two sides to get agreement everywhere and bring back to their relative constituencies a deal that everybody's like, oh my gosh, we got everything that we wanted. And in those types of situations, you don't end the negotiations until you're forced to. So if you've got a 2-week ceasefire to negotiate, you're not going to actually say like, yep, we caved and gave up on some of these things that you wanted us to get until it's sort of like, at the 11th hour. So not very surprising that the two sides sort of came together and then, saber rattled a little bit and then each walked off to their respective corners. That's actually probably the expectation. If you think about the power dynamics in the negotiation, it's very clear that the United States would like this conflict to be over in a way that maybe the Iranian people don't care as much about. You can see that in the United States' polling data around elections and the popularity of the conflict. You can see it in the University of Michigan Consumer Sentiment Survey, which just came out earlier today, which is the lowest consumer sentiment on record. And you can see it in the U.S.'s own rhetoric, right? We went into this war saying, hey, it's only going to be 4 or 5 weeks. We're not going to be there that long. The administration admitting, in some ways that they didn't want this to be, a long, drawn-out Ukrainian-style conflict. Meanwhile, the Iranians, for all intents and purposes, indicating, I'm dug in, I'm going to fight this fight for 1,000 years, et cetera, et cetera, et cetera. And so in that sort of power dynamic of one side would really like this to be over, the other side appears a little bit less like they care. Things that bolster the U.S.'s negotiating position, like the announcement that we're going to blockade Iranian ships from leaving the Gulf, actually help in the power dynamic of the negotiation. It may change the calculus a little bit on the Iranian side in terms of saying, oh, okay, I can't just kind of get by with the status quo. Maybe I do want to see this, wrap itself up a little bit. And so that, in a sense, was a positive development over the weekend, something that would strengthen the United States' sort of negotiating position, try and draw the conflict to a quicker conclusion. Certainly the market right now is betting that this will be a conflict that will get resolved, that this is not going to turn into the Ukraine. That if you look at the forward oil prices for October, November, December, They are at much more normalized levels than where we sit today. And that is an indication that the market certainly expects that cooler heads will prevail. Whether or not that's the case or not, we will just have to see, but that is certainly the expectation as of now. Which explains why, despite the fact that the negotiations broke down, the market's relatively flat and okay with that. One, didn't really expect the negotiations to conclude this weekend anyway. And two, this bolstering of the U.S.'s negotiating position helps a little bit with the idea that the U.S. might be able to extract concessions that, the administration would find acceptable or an acceptable off-ramp to end the war. So with that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great day, and I look forward to talking to you again soon.